Hi, you guys. I am super, uber, duper excited for another live with RoQuanda's Real Estate Real Talk. And if you are on my channel for the first time, you guys, my name is RoQuanda Guy, and I am an EXP realtor located in Palm Beach County. I do videos very similar to this so that you, as a consumer, can stay informed so that you can make the best decisions for you and your entire family. Now, I have a question for you guys. How many of you guys are out there looking for the perfect home? I get it all the time. And you're frustrated because you cannot find what you're looking for, right? And the prices are continuously going up. So I have a guest speaker, you guys, that have a lot of knowledge that I am super, uber, duper excited to talk with today. So stay tuned. She has some great advice for us. So you do not want to miss today's episode. All right. Without any further ado, we have with us today Miss Rebecca. I am so excited about this call. Rebecca, you guys, is the Vice President of Mortgage Lending. You guys, this woman is a book full of knowledge. She's absolutely gorgeous, and I cannot wait for our interview today. So, Rebecca, go ahead and tell everyone who you are, my dear.
Rebecca Trovich with Guaranteed Rates. I love my company a lot. I've been doing mortgages for 17 years. And for about 5 years, I actually owned a credit repair company. So I always tell people the answer with me is never going to be no. There's always a way to get to yes. There's always a pathway. Yeah, the loan amount doesn't matter. Your income doesn't matter. Your loan is $50,000 or $2 million. Everybody gets treated the same. Everybody's just as important.
Awesome. I like that. So tell me more about your company. So you've done credit repair, and you also help individuals with mortgages. So tell me, how long have you been doing that?
17 years.
Wow.
I know I don't look that old.
But 17, no, you don't.
17 years. And I've been with Guaranteed Rate for 5.5 years now. Mm-hmm. And I have to be honest, I've never worked for such an incredible company. The turn times, the teams, my amazing assistant, my branch manager. Guaranteed Rate also gives back to the community. Mm-hmm. They give a couple $100,000 a year to people in need. It's incredible. It really is. And my rates are basically better than anybody else.
I like to hear that.
Yeah.
I have a question for you. Mm-hmm. So most loan officers, if a person reach out to them and they immediately do not have the credit score that they need to obtain a home loan, most people would just put them on a list and follow up with them in a month or 2 months or a year. What do you and your company do that is different to help individuals? I'm going to go ahead and give you the full mic.
Well, it's not my company. It's actually just how I work. So you could go to 20 other VPs in my company. They're not going to do the same thing. So I actually work hand in hand with a credit repair company, and I send the entire report over to them. They review it. They send back an estimate. Essentially, I give a pathway. So like, for instance, if someone came to me like a 520 credit score, I review the report myself to see if there's work that we can do without actually needing credit repair, because sometimes it's a lot easier than you think it is. I mean, it can literally be done in 30 days or less sometimes. It's more about knowledge and education and the right guidance, really. And then those that are more difficult, I say dirty. I like to use that clean report, dirty report, that are dirtier than we can just resolve in 30 days. Those are the people that go to the credit repair company that I refer all my clients to. And their turn times, they're incredible. They're actually better than I ever was, which is, sad to say. But literally 90 days. 90 days.
Wow.
Finish. Yeah, it's really amazing. The longest I ever saw the repair process take was about 8 months, and it was a client who had like 60 collections. So that's still an amazing. That back when I was doing it, probably would have taken me about 2 years. So they're incredible. And then through the process. So for instance, instead of waiting for the qualifying credit score, we're going to take the time to review the income, the assets, and things like that, so that if there's any tweaking that we need to do, we're not waiting until we have the final credit score. We're getting all those ducks in a row during the process.
That's awesome.
Mm-hmm.
A side note, okay, so people know exactly. I have to tell everyone. I'm saying it from the mountaintop. When I first spoke with you several months ago, and I heard about what you can do for individuals, I sent you over my credit report.
Mm-hmm.
And you looked at it and gave suggestions on what I should do to pull my credit score up. And I followed exactly what you told me to do. I really did. And I think at the time I reached out to you, I was right at a 5, trying to find my way to a 6, but it was so hard. And I've been at the same place forever.
Yeah.
And then just by following your simple suggestions to the T, I can say that last week my credit score was past a 700, and all 3 of the credit bureaus.
It makes me so happy. You have no idea. I know. It makes me so happy.
That is just so
I get goosebumps.
amazing.
I really do.
Oh my goodness. I took a screenshot of it. I was so amazed. One was like a 720, another one was 715 and 745. So I was really like.
Wait, let me ask you a question though. When I gave you the instructions, were you thinking in your head, no, it can't be this simple? Were you like, nah, either she doesn't know what she's talking about, or I'll maybe get to a 600.
Yeah.
I get
because
that.
I had tried everything. I've tried these different companies. I was an agent for the different companies. And yes, they did remove some things off, but my credit score never went up. And what you explained step by step helped my credit score to really go up. And it's so amazing because yesterday I was paying one of my Capital One credit cards, and I was like, wait a minute. And I was like, that's not my credit score. Did something happen? And then I went to my email probably 2 hours after, and it says, because your credit score, we gave you an increase. So I went from $1,000 without me even asking to over $5,000 in a credit increase. So I was like,
this in turn will also improve your scores.
Yes.
Those higher limits are good when they report the update. It changes, it decreases the balance to limit ratio, and that incrementally increases your scores as you go.
Oh my goodness, I'm excited. So I had to share that. So for those individuals that are watching, the information that she provides is accurate and real. You just have to do the work. That's the big thing, is that you have to do the work, because people sit on it and think that it's so simple and so easy and it's not going to work. It really does work.
I think people are more overwhelmed, and I mean, it is. It's like learning a second language. But this is my analogy. If I give you all the answers to the test, and all you have to do is fill them in. But it's kind of like if you go to a personal trainer and you work your butt off, and then you go eat donuts and Taco Bell on the way home. You have to implement it, and you have to live it. Basically, it has to be long term. It can't just be, oh, I paid all these down, and now I have a great credit score, and go back into get more debt.
I love it. I was getting my nails done, and the guy was talking to me. He was like, my credit score hasn't moved, but I want to buy a house. And I was like, oops, let me tell you what Rebecca told me. And then you can go up, and then you can use me as your realtor. You can buy a house. You can call Rebecca to get a loan. And he's like, okay. And then after he finished doing my nails, I was getting a pedicure, and he came over, and he was like, tell me that again. And then he logged on to his account, and he showed me his information. Don't know me from anyone. It was my first time ever meeting him. And he showed me his credit score and everything. This is the nail technician.
That's trusting.
And I was just like, wow, just that simple rapport. He was ready to share everything.
Amazing.
So that's amazing. So let's go ahead and dive in today. So we know with the way that the market is, it's been a domino effect. It's been, even before the pandemic, we had very limited homes on the market. Usually we have about an 8-month supply of homes on the market. Prior to the pandemic, we probably had about 3 months supply of homes on the market, and then it dwindled down to about 2 months supply of homes on the market. And then from that point, it just went crazy because the interest rates dropped. You had more buyers in the market. You had sellers that was like, I do not want these people in my house. I'm not putting my house on the market. And then even after the pandemic opened up, where the market, it still went crazy. No one expected what has happened. And even to this day, a year later, we still have very limited homes on the market where the prices have increased. And I hear it all the time when people say, I'm not buying the house, it's not worth it. So, talking to you today, let's talk about some additional options because I have people that have qualified for a home loan, but there's nothing on the market they believe that they would want to live in. So
Right.
let's talk about rehabilitation of homes. Very
Mhm.
few people know about rehabilitation loans. Can
Right.
you give me more information about a rehabilitation loan and how does that work?
So obviously, I'm a huge fan of the renovation loan. I actually used it myself when I bought my last house 4 years ago. And to be honest, it was a foreclosure, and my friends thought I was crazy. Even my inspector thought I was crazy. He's like, you sure you want to buy this?" I'm like, "No, she's beautiful," because I knew, what it could be basically. And I would not have been able to get standard financing on it because I had mold. One of the bathrooms gutted down to the studs. Tub didn't work. Sink didn't work. Toilet didn't work in another room. The kitchen sink didn't work. Basic stuff, like just it would not be something that could get approved for typical lending. So there are actually four different types of renovation loans. The two that are the easiest basically are the one that I used, which is an FHA loan, and it's called a 203K. And there's a standard and a limited. The limited means it's limited to $35,000, which is exactly what I needed. And it's easy. There's only two draws, basically getting the money for the repairs. There's only two. The other one has like 10. It involves more. You're allowed to do more. But let's just say, for instance, if you find a house that needs a new roof, which is an issue in today's market because of the changes in the insurances, homeowners insurance, people are getting canceled. So a new roof is really important. So let's say you find a property that hasn't had updated electrical or has nasty old kitchen or bathrooms, needs a roof, needs new flooring, beat up, needs maybe impact windows. So up to $35,000 on a limited renovation loan, you can roll all of those in. You can actually finance up to 110% of the projected value. So, example, if you bought a property for 220 and you knew you were going to roll in 30,000, now you're at 250. So you can actually finance up to 10% above that. So let's
Wow.
say, it makes it nice because then it makes it nice because then at the end you essentially get what you want, as opposed to, ugh, this house doesn't have this, it doesn't have that, I don't like this, I don't like that. Okay, well, you can get that house and you can make it exactly what you want and end up paying the same cost as market value basically.
Okay, let's stop there. Let's put a pin there as I picked up from
You know
another
I'll go
line
on
from
and on
another
and on,
person.
so you just got me
Well, let's
more.
put a pin there. The reason why I want to put a pin there is because I don't think people really understand the significant or how big that is.
Mm.
So you're telling me that if, say, for example, I'm approved for 300,000 and I find a home for 250,000 in ugly duckly that nobody wants because it have so much work that needs
My
to be
favorite
done
kind
to
of
it,
house. My favorite
that
kind of
I
house.
can use my 203K FHA loan to fix
Mhm.
up this home so that it is exactly what I want. So most people don't understand that a 203K covers just about everything from a garage to cabinets to flooring. Tell more about that. Like, how does it cover, not only does it cover the roof, but if you want to put a pool in or you want new cabinets, talk
So
about all of that as well.
the FHA standard does not. That's when you have to go conventional. So it's a different type of renovation loan. And the conventional renovation loan basically has no limits. You can put it in a pool, you can put in an extra bedroom, you can put in an extra bathroom. It includes everything that I mentioned before, but also structural. So if you wanted to do an addition, if you wanted to add a garage, if you wanted to make your garage bigger, if you wanted a new driveway, any of those things, a second floor even, it basically, as long as the value is there, the projected value is there, you're golden. It's incredible.
Wow.
I'm a
So
fan.
is that process a little bit longer or harder than a traditional loan process?
Definitely not harder. Definitely not harder. The only difference in the actual process itself is you need a contractor who is a licensed approvable contractor. Basically, he can't have any judgments against him. He's not being sued. We want him to be able to complete the job once he starts it. So the contractor comes in, and when you have your inspection, but the contractor is going to give you numbers, real numbers, what it's going to cost to get it to exactly where you want it. So in the process of the loan, when we order the appraisal, typically we provide the contract, the purchase contract. In a renovation loan, we provide the contract in addition to the estimate of repairs. So the appraiser goes out with his estimate, and he gives you a current value, and then he gives you a projected value based on the repairs after improvement. And that's the amount that you can lend up to 110% of.
Wow.
So if it under appraises a little bit, you still have a lot of cushion to do all the things that you want to do. It's amazing. So as long as you have I don't want to say an efficient contractor, it only adds maybe about 2 weeks to a standard process.
Okay.
Yeah, it's amazing.
It is amazing.
Yeah.
As I was telling you before, my very, very first contract was a short sale and a 203K FHA loan together. So in that first transaction as a real estate agent, I learned so much.
That's rough because a short sale is difficult on its own. And then if you aren't familiar with the loan process in general and you tackle a renovation loan the first time, that's tough. You got it out of the way, though. I mean, you're still here, so obviously you're like, yes, I like this.
I did. It gave me a lot of rushes.
Yes, and then it was very satisfying in the end.
It was. It really was. Let's talk a little bit more about different types of renovation loans that a person can get. Is it just with FHA, or can you get one with conventional? Can you tell me more about that?
Yeah. The reason why I tried to go FHA first is because for the renovation loans, the FHA loans are actually typically about 1% better in rate. So, if you're looking at a $400,000 purchase amount, loan amount, that makes a couple $100 difference in your monthly payment. But if there are things that are outside the parameters of FHA, or FHA has a lower loan amount, like allowed loan amount. So if we need more than, 400,000 in our overall loan, then we have to go conventional. We can't go FHA. So like literally every situation is completely different. If I know that there's a structural issue, then I'll try to go with the FHA standard loan, which means we can go above the 35,000. We can put in the walls. We can do a second floor, that type of thing. FHA does not allow for install of pools, though. They don't do what they call luxury items, like no gazebos. they consider a gazebo a luxury item. I'm not sure where they created the list, but yeah. So, let's say, for instance, if someone really wanted to have a strong hurricane impact resistant home, you'd want to do impact windows, which could be right now anywhere $20,000 to $30,000. A new roof, anywhere from $8,000 to $20,000, depending on the roof. You wanted to update your AC, so you're energy efficient, and your electrical, things like that. Fire hazards. Then you're talking probably about $70,000, $60,000. And instead of doing those things over time, rolling that into the conventional loan or the FHA standard, you get the discounted insurance, you get the lower FPL bill every single month. You don't have to worry about putting up shutters anytime we have all these things that really make your life easier.
That's no brainer. Oh. And then what happened if, say, for example, you really do need a 5-bedroom or you need a 4-bedroom, and right now what's on the market are 3 bedrooms, 1 bath, which we know is not functional for huge families today. Right. Can a person use this loan to help them to add additional bedrooms and bathrooms?
Yeah. So you'd have to use either the conventional loan, depending on the loan amount, or the FHA standard. And those are the ones. So if all you see in the area that you really, really want to live in is a 3-1, and it's selling for $80,000, $90,000 less than the houses that are 4.2s or 3.2s, then you use the renovation loan and you add on your 4th bedroom or your 2nd or 3rd bathroom, and your end projected value is actually going to be higher than the houses around you. So not only do you get to have your cake, but you get to eat it too, and then put icing and cookies on top of it. You
That's
literally get
simply
everything you want.
amazing. That's like mind blowing that most people really don't know this information. So you can actually buy that 3-1 and you can
Mhm.
go ahead and renovate the home, roll all that into your mortgage, and you actually have the home that you want
Yeah, and you
and
can live
at
in
a
it
lower
while it's
price.
being renovated. I lived in mine. I lived in one bedroom while I renovated all the other bedrooms. I literally lived in one
Wow.
room. Mhm. Yeah. Well, if you're doing an
Wow.
addition, they usually tape off that part that they're adding on to, and the rest of the house is livable.
Awesome. So
Mhm.
I'm excited about that. Now tell me, what happened with those individuals that are missing out? And I see a lot of people are missing out on the opportunity of buying a duplex or a triplex. Can you tell me more about that? Because when I get a lot of buyers, they're fixated on a single family home. They would probably reduce down to a townhome, but that's it. When I bring up the information about possibly getting a duplex, because what I found is that the prices for duplex didn't go up that much more like homes did. Homes, single family homes, townhomes went through the roof, but duplexes and triplexes went up, but not like the others. Can we talk more about what buyers possibly are missing out on, or what they don't understand about the benefits of having a duplex?
Well, so the misconception is that, well, if I only qualify for $200,000 for a single family or a townhouse, why are you telling me I qualify for a $350,000 duplex? Because, I mean, truthfully, if someone said that to me, that doesn't make any sense. But the amazing part, the magical part, is that when you get your appraisal, there's a rent schedule when you have 2 units or 3 units. A rent schedule basically tells us as the lender what the average rent prices are in that area and what you're going to be able to collect for that second unit. That income, even though it's just projected, we take 75% of that, and that's actually used as qualifiable income. That's added to your income. So so if you were able to qualify for a $200,000 single family or townhouse, the likelihood of getting qualified for a 280 or $300,000 town or duplex is very likely. Triplexes are a little different. It's not so much about using that income to qualify. It's actually about all the different rents that you're collecting have to be able to cover the entire mortgage payment. So triplexes and fourplexes are a little bit different, but you always get the benefit of a primary residence. So if you have an FHA loan, we're talking 3.5% down. That's it. So not only do you get your property, but you also get rental income. You literally have somebody else paying a major bulk of your mortgage payment, which I think is brilliant. That's actually what I was looking for when I found my foreclosure. And I kept getting outbid by investors. But I found a property that has multi-density, so I can turn it into a 2 unit. So that's actually I think the duplex and triplex. Look at it this way: if I already own a home, and now I want to really invest in my future, I want to be a landlord. I want to own property. If I do it as a primary residence, I can get in FHA 3.5% down. If I do it conventional, 5% down minimum. If I wait and I buy my single family or townhouse first, and then I want to go after an investment property, because it's more than 1 unit, now I need 25% down.
Wow.
Yeah. So the way to build, get the properties under your belt is to start with the 2 units, which is why that's what I was looking for.
Now, with a duplex, how long does the individual have to live in the property as their primary residence for that 3% or
There's
3.5%?
there's no requirement. As long as you occupy the property as your primary residence within 59 days of closing, it's your primary residence. We can't tell you how long you have to live there.
Wow, that's amazing. Now, do you have to have tenants in place
No,
when you're in the loan, or they're projecting it based off of what it
that's
can
schedule.
be?
Right. Exactly. It makes it incredibly convenient. It really opens up the door to, first of all, people who really want to start investing in real estate, but are in a place where they can buy their primary residence as well as 10, 20, 30% down for the next property, it really gives that person an opportunity to build without coming out of pocket by, 50, 70, 80, $100,000.
All right. So just a question that some viewers may ask is, okay, if I want to buy a duplex, okay, do I have to have a 700 credit score? Do I need to have a 750 or 720? What do I need to start that process if I decided this is a great route to go because I have a place to live, the interest rate's at 3.5%, and then I become a landlord. So that's basically going to cover my mortgage. So if a light bulb go off on someone today and they decided to do it, what are they looking for as a credit score?
The interest rate would be lower than 3.5%.
Wow.
The down payment would be 3.5%. So it depends. Again, it's based on the loan amount. The minimum loan, again, maximum loan amount is different for 1 unit, different for 2, different for 3, different for 4. Okay. So I can actually send you that link later on if you want to see. And it's actually different by county too, which is kind of bananas, but it changes. Palm Beach County is actually higher than St. Lucie County. What is the one in Key West? It's even higher than the ones up here. So if you found a duplex that met FHA guidelines, really 640 credit score. You could do it with a 620, but if someone was going to go after that kind of a purchase, I would really want to work with them on their credit and educate them, kind of give them a little bit more stability and, a concrete foundation before they took that initiative. But really all you need is 620, 640.
I mean, you said something really powerful. You said that you want to educate them and give them more buying power. That's really good because most people don't do that. Don't take the time to educate their clients as they go through. And for me, educating and setting realistic expectations is very important.
Well, 17 years ago, before I started doing this, I had a 580 credit score. I owned a business. I was too young. I made too much money and I just wasn't educated. I grew up super poor, Section 8, food stamps, Medicaid, all that stuff. And so we never had a budget. We never had good credit. We never were able to finance anything. Mm-hmm. So everything that I learned was literally trial and error for the first few years that I did mortgages. And coming from that place, everybody else who's in that place, I want to help them because it's all about education. Now, obviously, it's just like hiring the trainer, eating donuts. If I educate, you know what I mean? That's like the best.
That's me. Don't talk about me hiring a trainer, eat a donut at the same time. Don't talk about me.
So I can ride on my treadmill, so it's okay. As long as I keep walking on the treadmill.
Exactly. So I have another question for you. So we talked about duplexes and we talked about what other way, I should say, that a person that trying to just get their feet, into something. Right now they're paying rent. Mm-hmm. Rent has gone up tremendously. Oh my goodness. The prices for rent is through the roof. Yeah. What would you say for that individual that's saying, you know what, I'm up under 100,000, I have no other options. I'm paying this rent and my rent is just about as much as a mortgage, but I don't think I can qualify. What would you say to that individual?
You mean like in general, like a blanket statement? First of all, find out. Find out. It doesn't cost you anything to get, go through the process of pre-approval. Mm-hmm. And if you're working with somebody who really wants you to be a homeowner, somebody who really wants you to grow in life financially, have a room for your kids, all of that, they're going to guide you. They're going to give you the answers. They're going to give you a pathway. It doesn't matter if it takes a year, 2 years, 3 years. It doesn't matter. However long it takes, as long as you have that information and you're willing to put in the effort, every person out there can be a homeowner. Every single one. Every single one.
Awesome.
Starting.
Just started.
That's it. Just like the first day when you diet, just like the first day back at the gym, that first step is always the hardest. But then you feel good and you're like, oh wow, I'm making changes. I'm making a difference. And the final outcome, this is what I tell people. If you stick with me, 100%, the final outcome will be that you're a homeowner.
I
There's no
love
other,
that.
there's no
I
other
love
option.
that. There's
That's
no
the
other options.
no, that's the end
Exactly.
result. Absolutely. Yeah.
There's no other option. Okay, so let's dive into condos.
Oh yeah.
Now, usually people try to stay away from condos. What are your thoughts on that?
Why do you think they try to stay away from condos?
A lot of times misunderstanding, a lot of times probably thinking they cannot afford it. Again, it's just ignorance. So from a loan perspective, what do a person need to know if they decide that they want a condo, or what would you say to them
So
about renting, or forgive me, purchasing a condo?
let me start by saying it's not necessarily I don't say ignorance. Bad information, misinformation. It's not necessarily that. You have to realize that there's actually three levels of lending. There's three. There's the retail people, Bank of America, Citi. They don't have money. They're lending their consumers money. So they're incredibly tight, their guidelines. They have what are called overlays, which are extra rules on top of lending rules. So just because they tell you that you need 20% down to buy a condo doesn't mean that that's the guideline. That means that that's their guideline. So just because one person says you can't do that, I can't do that, doesn't mean it can't be done. The
I
other,
agree.
yeah, the second type of a lender is a mortgage broker. And that's exactly what they are. They broker. I was some people who see this, they're not going to be happy that I'm saying this. I was a broker for the first 8 years. I'm doing it for 17 years. And oh, you don't have any control. You basically have to find a wholesaler to buy your loan. You have to shop for a better rate. You have to shop for all of those things. When I became a lender, I was like, oh my goodness, what can I do? I could do everything. It's incredible. Before I became a lender, I was not able to do condo financing with 3% down. No, I was like, wait, we can do what now? Wait, what now? What I can lend on? Yeah, it's not that it's misinformation. It could be that who you're talking to isn't able to do I'm a direct lender. A direct lender, we have our own money. So we go off of Fannie Mae, Freddie Mac, and FHA guidelines. We don't have all the overlays that a broker might have or a retail bank might have. So you're going to hear me say I can do something, and then you're going to go to somebody else and be like, you can't do that. No, they can't do that. I can do that. So I know it's very exciting. So when it comes to the condos, to me, it really is a no-brainer. It's almost like, when they say you invest in a 401k or a Roth IRA, compound interest, right? You're building on something, and the sooner you start, the better. The same goes for real estate. The average person is paying $60,000 to $80,000 in rent over the course of 5 years. So when you're buying a condo, there are a few caveats to the guidelines. My favorite one, though, is for people who make less than $50,000. Both Fannie and Freddie have a program that allows someone that makes less than the median income in that county, in that area, to just put 3% down on a condo purchase. If you can afford to live in an apartment and don't mind apartment living, and you can afford first, last, and security, then you could be a homeowner. I mean, to me, yeah, it's just it's a no-brainer. It really, really is. And then you have control. You have control, and you're investing. You're investing in yourself. The average person stays in their apartment rentals for 2 to 3 years. So let's say you're not sure what you want to do, or you're not sure if you want to stay in that area. You don't have to stay in the area. You can either sell it, or you can become a landlord. If you find someone to rent that condo and you're ready, let's say you got an increase in your pay, or you got a better job, all we need is for you to find a tenant for that condo, just the lease, and click first and last. Now you can go buy your single family. There you go. Now you're a landlord. Now you're investing in your financial future.
That is amazing. So when a person comes to you, okay, how do you decide which loans will be best for that particular individual based off of their credit score? Just give us a little more
It's a
insight.
combination of everything. So debt to income ratio factors in, all of your debts plus your housing expense in a percentage of your income. If it's higher than conventional loans, that's what FHA is used for. FHA typically caps out at about 57% of your income. So if you have student loans, or if you have a high car payment, or any fun stuff, and even if you have decent income, if your overall debt to income ratio is in the 50s, then you're going to want to go FHA. But if you have 49.99 debt to income ratio, and you have, let's say, a 740 credit score, even if your housing payment is 49.99 and you have no other debt, then you can go conventional. Each program has its pluses and minuses, for sure. When you go conventional, it's really based on the credit score and down payment. The monthly mortgage insurance premium, that's the premium that you pay when you're not putting 20% down on a purchase. It's basically insuring us in case you default. If you have a 780 credit score on FHA, you pay the exact same premium as everybody else. You don't get anything, no blessings.
Wow.
Your phenomenal credit score, none. But which is 0.85%. That's what everybody pays if you're putting the minimum down. On the conventional loan, if you have a 780 credit score, instead of that 0.85, you're basically paying like 0.2 or 0.3. So yeah, you, like, for instance, that's what I do. I run it through the system. I review everything. You compare to make sure that your borrower is getting what's best in the long term, for sure.
Awesome. This is some great information. So let's recap, because I know we said a lot in 27 minutes, almost 30 minutes. So
I've
for
been
that
talking forever
individual,
about this.
I know, I can too. So for that individual that says, hey, I am ready to invest in myself. I am sick or tired of being sick and tired of paying rent, paying my landlord's mortgage, and now I'm ready to step up. Even though the market is crazy, there's different options out there for an individual. The first thing to do is to reach out to Rebecca, to talk to her, to see where you are with your credit score. She's absolutely amazing. And then she's going to look at it and see where you are. From that point, trying to find out what's the best loan for you based off of your debt to ratio that I'm hearing, and your credit score, and how much money you have in reserve. Is that correct?
That's exactly 100%.
Okay, perfect.
Also, the misconception for a lot of self-employed people is that, all of us who are self-employed, we write off a big chunk of our income. There are non-conforming loans, which means not FHA, not conventional. There are outside the box loans that are available, including bank statement programs, where we just look at literally your deposits on your bank statement. No tax returns are needed. There are outside the box loans for self-employed people that they don't have to, suffer and never, or pay hard money, rates like 9-10%. There are other options out there for you. The rates are usually like 4.25 right now. But it's an opportunity. You don't have to wait until you pay the IRS $80,000 in taxes so you have qualifiable income. There are other options.
I like that. I like options. I tell people all the time, options are amazing. It just becomes a problem when you don't have options. Options, and knowing your options is always an amazing opportunity. All right, so we have options. And then after the options, we want you guys to really understand from this video is that if you don't find that perfect home, quote unquote, that you've always dreamed about, there is options out there. We talked about renovation loans, not necessarily 203K. There's different renovation loans out there. And that not every loan officer or broker do them. Finding the right person that knows how to do it, how to get the paperwork done, how to be able to find contractors to do the work that needs to be done, and have everything submitted within a timely fashion. Because what I've heard from some people is that those renovation loans take forever and they're difficult. It's not. It's just finding the right people to be able to put all the moving parts together at the same time. Is that correct?
100%. 100%. I mean, if it was a nightmare, I wouldn't have done it for my personal purchase, obviously.
Yeah. If it wasn't a nightmare, I would still be looking for another profession.
You'd have been like, this is not for me. But you got to see exactly like the short sale part of it, and the fact that they bought this house that I'm sure needed a lot of work, especially if it was going through a short sale. And They literally got their dream home. They got everything that they wanted just by changing the program. I think that's
Exactly.
phenomenal. Yeah.
I think it's a great opportunity. It helps you to find a home within budget versus going out of budget. You're
Mhm.
probably going to get a great deal for it because everyone is looking at the home saying it's too much work and I
Yeah.
don't want to put in the work.
Exactly.
And
Sure.
then being able to do that, you're able to now find a home that you can add on to it, possibly regardless. I shouldn't say regardless, but depending if
Right.
it's a limited or a standard, what you can do to make it your own dream home,
Exactly.
which I love about that.
Yeah, me too.
And then we talked about the opportunity of moving into a duplex, being able to still have your section that you actually live in, and then renting out the second half, and coming up with very little down payment and
Right.
your interest rate because you now have an income producing property. Is that correct?
That is absolutely correct. It's
Yeah.
amazing. I know. It is. I think it's incredible.
I think it's incredible. Do you want to elaborate on that a little bit more, like about the duplexes and stuff, or you've covered everything with that?
I mean, it's really the exact same concept of buying a primary residence. You still have the same closing costs. You still have the same down payment. The the rates are a tiny bit higher, like maybe a 0.25%, but not dramatically. The FHA is definitely the way to go if the loan amount, allows it. I'll send you a snapshot of
Okay.
the 1, 2, 3, 4 unit. You can put it in the comment section so
I
that
could.
they can see. Yeah, I think the 4 unit goes up to like 1.2 million or some insane amount. That
Hmm.
they're not even. Well, I guess you could probably find one in our area. Um, but they're the same process. Closing time takes exactly the same. Nothing else is different. So
Awesome.
yeah, some people probably have never even looked at it because they're like, well, I can't qualify for a 400, $500,000 purchase without realizing that, yeah, depending on what that rent is, you know, this might be the one for you.
It is. And if you look at the single family homes and the townhomes, the prices have gone up tremendously. And I
Yeah,
was looking at duplexes, and the prices for those, they went up slightly, but not as
they
much.
didn't have the same impact. Yeah,
Exactly. So an individual that qualifies for 200, $300,000 may be able to find a great duplex,
right.
within your budget.
Hmm. Absolutely. 100%. And so if you don't know, and it's something that you're interested in, but you have no idea because you never even thought it was a possibility for you, that's when you make your loan application. We plug it. We use like for instance, a duplex that's actually listed right now. We plug in that specific scenario and see if it works. And if it doesn't, I'm going to tell you what will work. Okay, maybe that one didn't work, but if you find XYZ purchase price with this rent, that's the one that's going to work for you. And then it's up to you. Like if it takes you a year to find it, if it takes you 2 years to find it, it took me 2 years to find my house. I kept getting outbid by investors. It took me, I was like, oh, I had to extend my apartment lease, but I was patient and I found exactly what I was looking for. Also important to note, uh, foreclosures aren't as rampant as they were before. But if you find a property that's owned by Fannie Mae will take an offer by someone who's going to live in the property over an investor. That's actually how I got my house because every duplex, every fixer upper that was making offers on, I was getting outbid by investors, and so the house that I ended up buying was Fannie Mae owned. And I had to increase my offer by 10,000, but I was still lower than the investors' offer. But they took mine because it was a primary residence.
Wow, that's
Yeah, yeah.
amazing.
I know. I
All
like
right.
it.
So, is there any other tips that you would like to give to the viewers, about becoming a homeowner and just thinking outside of the box? I'm going to give you the floor.
Well, assets and down payment are sometimes a struggle, and people think that they have to have 20,000 in the bank, 30,000 in the bank. But what people don't realize is that gift funds are allowed. Literally, you could have 5 donors. You could have your mom, your stepmom, your dad, your stepdad, your uncle, your sister, your brother. Everybody chip in and give you 1,500, $2,000. That literally can cover your down payment and most of your closing costs. So if you have,
Did you see that?
That's it. That's it. That's funny. So, people are like, well, I only have this much saved. Okay. Well, ask. All they can say is no.
Mhm.
And it doesn't have to just come from one person. Like, your dad doesn't have to have $10,000 to gift you. He could give you two, and sister can give you two, and brother can give you two. Whatever it takes to come together. That's really all that matters.
I mean,
The
that's just mind blowing right now because when I'm thinking about a person giving you a gift, I'm thinking about them giving 10,000 or 15.
right.
I called you the other day. Somebody just gave an emoji with the mouth open, just like I did. And I'm thinking about, okay,
Yeah.
oh, my mom's giving me 10,000. My mom's giving me 20,000. This her one that her dad gave her 40,000. It's let me get in it, blowing
It's okay.
that I never thought about that gift could be
Broken up.
2,000 from one and
Yeah.
2,000 from another and 2,000 from another until you get 10,000.
Because if you think about it, I mean, the average family doesn't have $20,000 to gift you, but they might have 1,500 or 2,000. Or, I was going to say, the one thing to keep in mind though is if you do have donor funds, that donor has to be willing to give me, the lender, who's giving you hundreds of thousands of dollars, a copy of their bank statement.
Okay.
So that's only, sometimes people get a little weird, like, I don't want you to see. Well, just keep in mind, I'm giving hundreds of thousands of dollars, so I just want to see the bank statement to make sure the money's there.
Exactly.
We can talk about that off, privately. One other thing that I was going to say is on FHA loans, very, very common. If, a lot of people work under the table or have side jobs, so we know they have money, they have income to pay their mortgage, but we can only prove a portion of it. FHA and the conventional loans allow a non-occupying co-borrower. So let's say you're a student, you're still in school, but you have a job, and your parents like supplement you whenever, or you have a side job where you have cash and you can't use that income. As long as you're non-occupying, they don't have to live with you. As long as their debt and their credit score is enough to offset the housing payment and your debts, now you qualify.
Another emoji face. Wow.
Yeah.
You guys, the information that Rebecca is sharing with us today is absolutely amazing. I am so
Thank you.
thankful. I have another question before I let you go, though. Right now, Airbnbs are becoming more and more popular.
Go ahead.
What would a person need to be able to purchase an Airbnb as
Well,
far as from a loan perspective?
so distance is a factor. If you buy an investment property, minimally you need 15% down. Minimally, if it's a single family. Rates are much higher on an investment property. If the property is over 100 miles away from your current home, where you reside, where you do not have to own a home, you can be a renter and still buy a second home. I know, right? Wait, do it again.
Can you repeat that again, please? Go ahead, one more time. Repeat that
So
for me.
you can buy what's called a second home. The second home only refers to the fact that you live in a primary residence, don't have to own that primary residence, but you can still purchase a second home.
Okay.
The benefit of that, so it has to be at least 100 miles away from where you currently live. That's what makes it obviously a second home. I mean, some people do have like the condos on the water, but and there are exceptions, if it makes sense. But for the most part, the parameters are the 100 miles. The benefit of buying a second home is that you only need 10% down, and the interest rates are the same as a primary residence.
Okay.
Your facial expressions.
Okay.
Yeah, so if you are living in Palm Beach County and you're looking at something, how far is Miami? Is Miami 100 miles? Down there
It
somewhere.
is.
If as long as you are in that bracket, then you could make that purchase as your second home for 10% down with the same interest rate as a primary residence.
Wow.
And you do not have to be a current homeowner. You can be a renter.
Wow.
Wow. COVID
Okay.
actually messed that up a little bit because federal investors, et cetera, blah, 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 they were holding back on certain purchases. So they actually hacked our interest rates for second homes for a good year plus. But they have recently removed those. So the rates are back to the same as primary.
Wow. And I'm just checking to make sure there's no questions here. So we have no questions. I guess we did a great job in asking questions and clarifying it. I know it is. It is a lot of information, guys, that we talked about. We talked about a lot of stuff. So I'm going to go ahead and I'm going to show you Rebecca's phone number. Go ahead and give her a call. Let her know that
if you're not somebody who wants to talk on the phone.
Yes.
I'm cool with that too.
Yes, feel free to text her. I text her as well, and she does text back. So feel free to text her and let her know that you're interested in starting the process for home ownership. Most likely, she'll give you a link. If I'm not saying this correctly, please correct me. That would take them right to your page to start the process for home ownership. And then from there, you'll be able to reach out to them and see, re-verify the information, see what they qualify for. If not, then start a plan to help them to home ownership. And if they do qualify, what's the next step to move forward? Is that correct?
Correct. And very important, it doesn't cost you anything to find out what you're pre-approved for. It doesn't cost you anything to complete the loan application. It doesn't start costing anything until you are actually in contract. Nothing costs you anything. So, why not? If you're just curious, why not? At least if you find out what you're qualified for, you're like, no, I don't want anything in that purchase price. Okay, so now you know what to shoot for in terms of a second job or higher pay. At least you'll have a goal, that you can aim for.
Exactly. I'm so happy. I'm so happy we did this. We've been talking about it pre-COVID for a while. I'm so glad we got an opportunity to actually have this face-to-face conversation. And I am so thankful for you and the Lord. I'm telling you, your advice has helped me tremendously in so many ways, not only just increasing my credit score, but just boosting my overall confidence. When I called you, I was working on my credit score forever and ever and ever, and things did come up, but my credit score never went up. And to now have my credit score over 745, I am so thankful for you, your knowledge, the grace of God. You are absolutely amazing and beautiful inside and out. And God will continue to bless you because you pour out into people. And that's what makes a huge difference with you and your practice. So I pray many blessings, abundance to you and your entire family, my dear.
Thank you so much.
You're welcome. So I think we are done. We've been on here for about 40 minutes. You guys feel free to reach out to Rebecca. She is a wealth of knowledge, you guys. And I will see you guys on the next video. Bye-bye.